So the Vodafone Idea share has surged about more than 20% today. I really fail to understand why it has surged where it should actually go down. And the reason for surging is I remember a quote from the intelligent investor that the markets can remain insane longer than you can keep your sanity. That's what Ben Graham said in The Intelligent Investor. And so this is that insanity. People think that government buying a stake of 36,000 crore uh, at the face value of 10 rupees per share is a good thing in the company. It will help in the long run. It will help the company to remove debt from its balance sheet. And so that is a good move. But I don't agree with that. Let's check the stock movement in the recent past. So first of all, it has been a volatile stock for a while, and it has completely lost more than 90% of its value in the long run in the last 10 years. So if you look at this stock, so if you look take a look at this stock, first of all, the government will convert its debt of 36 or 37,000 crore into equity, and this will be at a face value of 10 rupees per share. So government will not be buying the shares from the open market. It will be converting its existing debt into equity. That means additional shares would be issued to the government, and that total government shares in Vodafone Idea will now account for 48.99% of the company. Now, I heard somewhere on the business channel that if government converts all of its outstanding debt to Vodafone Idea into equity, it will have 81% stake in the company. So, when the company issues equity to the government, the net impact of that would be that there would be an additional number of total outstanding shares. So, the revenue per share will go down and profit per share will go down. If your revenue per share and profit per share is going down, then why would you pay more for this share than you did earlier? Last week it ended at 6.8 rupees per share, and currently it is selling at 8.3 per share, which is an increase of 22%. This really makes no sense to me. I don't know what the buyers are thinking, because if you do the total calculation here, let's take a look at the total number of outstanding shares. So currently there are 62 billion shares outstanding. So how many new shares the company would be issuing? Let's take a look. So the total outstanding amount is 37,000 crore. So this is 1 crore into 37,000. Now divide this by 10. So this will be total number of additional shares which Vodafone Idea would issue to the government. So this is million, billion, 37 billion additional shares, and currently the outstanding number of shares is 62 billion shares. So total impact of that would be 62 plus 37, that would be 99 billion shares. So in round figure we can assume it to be 100 billion shares of the company. Now if you divide the now if you divide the total revenue, which is 430 billion rupees, by 100 billion outstanding shares, the revenue for each share would be 4 rupees. And then profit anyway is negative, but if you come down to EBITDA level, it will be 1 rupees per share. EBITDA would be 1 rupees per share. So both the revenue per share went down, the EBITDA per share went down, and net profit per share will go down even in negative. So why would you pay more for this? It makes absolutely no sense. If you come to the balance sheet, so see the company has a total asset of 1.8 trillion, or round figure we can say 1,800 billion, since we are talking in terms of billions here. Most of it is debt. So the total debt right now is 2.89 trillion. If you subtract 36 or 37,000 crore, 1 billion is 100 crore. So 37,000 crore is 370 billion rupees. So if you subtract 370 billion from this total liability figure, the round figure will still be 2,500 billion. Yeah, so 2.5 trillion rupees. So the company would still have a net debt of 2.5 trillion rupees. And most of this liability is long term debt. So that checks out. So if you subtract this round figure, it will still have a liability of 2.5 trillion rupees. And if you look at the equity portion, the retained earnings has been going down consistently, which supposedly will continue to go down in future as well, because just because government is going to convert a part of its debt into equity does not mean the company will start earning money from next quarter. And remember, there is more debt left, so company would have to convert more of its debt into equity, and government will own 81% of the company, so the total float of the company would then only be 19% of the outstanding shares of a higher amount of total outstanding shares. So the revenue per share again will go down, and net profit per share will go down. So it makes no sense to buy this share in the range of 8, 9, 10 rupees when the earning would not even be 1 rupees in the future. So if you believe in value investing, the right thing to do would be to wait till the company becomes profitable, till the company is able to remove vast majority of the liabilities from its balance sheet and shows profitability in the income statement and has some positive cash flow as well. So if you look at the current cash flow statement, it does show some cash through other operating activities. So net income is negative, and then it has a very high amount of depreciation and amortization, and then it has high amount of other operating activities as well. So to look into this, we need to look into their annual report and go into the notes to figure this out. But it shows some positive cash from operations. However, if you come down to cash from financing, you will see it has very high total debt paid. That was all for this video. I just wanted to rant that I don't understand why people are buying these shares when it should go down. I have no equity. I don't own any of the shares of the Vodafone Idea. Neither do I am looking to own any, and I don't trade in this as well. So I have no stake here. It just blew my mind out that retail investors, or I don't know if it's retail or if it's institutional investors who is buying this, but why would people pay more money if the net revenue per share and net income per share is going to go down? That's all for this video. Thanks for watching.